Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets inside company reports, and today we are diving deep into Wetouch Technology, Incorporated's latest proxy statement where they're asking for some pretty big changes. Imagine a company that wants to go from selling 15 million shares to a massive 65 million shares. That's like adding 50 million new puzzle pieces to an already complex picture. We're going to break down what that means for you, the shareholder, and what else is brewing in this filing. Alright, let's get into the nitty-gritty of Wetouch Technology Incorporated's annual meeting and what they are proposing. First off, they are holding their 2025 annual meeting of stockholders at their headquarters in China. A big part of this meeting is electing new directors. They are proposing 5 directors to hold office until the next meeting. We have Guangrong Kai, who is the chairman and has a background in economics and management, even an MBA from Tsinghua University. Then there is Jian Feng, the secretary and director, who has managerial and technical experience with touchscreens. Jackson Huang is another director, a specialist in administrative personnel and management. Jing Guo, also a director, brings expertise in human resources and corporate administration. And finally, Yuna Liu, a director with over 20 years of experience in auditing, accounting, and financial management. It is interesting to see a mix of backgrounds here from pure economics to technical and administrative roles. Now, this is the headline grabber proposal 3. Wetouch wants to increase their authorized common stock from 15 million shares to a whopping 65 million shares. That's a 5-fold increase. They say this is for corporate purposes like equity incentive plans, raising capital, acquisitions, strategic partnerships, and other identified future needs. They want the flexibility to issue more stock without needing immediate shareholder approval for every single issuance, unless the law requires it. This is a significant move that could lead to dilution of existing shareholders' ownership if not managed carefully. Think of it like a pizza. If you suddenly decide to cut the same pizza into many more slices, each slice becomes smaller. Looking at the financials, especially in their pay versus performance table, we see a net loss for 2024 of $6,031,158 and for 2023 of $8,264,331. This indicates the company is currently spending more than it is earning. When we look at what the top executives are making, Zhongyi Lian, the CEO, earned $12,857 in salary in 2024, down from $20,336 in 2023. Xing Tang, the CFO, earned $28,150 in salary and bonus in 2024. It is particularly interesting that Yuhua Huang resigned as CFO in July 2024, and Xing Tang took over. The compensation for the CEO seems quite low compared to many US-based tech companies, especially given the company's financial situation. And when it comes to accounting, they paid audit fees of $250,000 in 2024, down from $275,000 in 2023. These fees were paid to Enrome LLP for 2024 and BF Borgers CPA PC for 2023. Notably, they've appointed Estant Partners PLT as their new independent auditor for the fiscal year ending the 31st of December 2025, dismissing Enrome LLP. This brings us back to the core of the filing, the proposed amendment to their Articles of Incorporation, which is attached as Annex A. This document lays out the legal framework for the proposed share increase. It confirms the company's name and details their capital stock structure. Within this, they are proposing to increase the total authorized shares to 75 million. With 65 million of those being common stock, this is where the legal approval from shareholders is being sought. The board is strongly recommending a for vote on this charter amendment. They believe it is in the best interest of the company and its shareholders, providing much needed flexibility for future growth and operations. So, what's my take on all of this? Wetouch Technology Inc. is clearly looking to position itself for future growth and flexibility, particularly by massively increasing its authorized share count. This is a common tactic for companies aiming to expand through acquisitions or raise capital, but it also carries a significant risk of diluting existing shareholders. Their recent losses suggest that while they are planning for the future, they are currently operating at a deficit, making the need for future capital raising or successful business turnaround even more critical. The low executive compensation might be a sign of cost consciousness or perhaps reflects the company's current financial state. The change in auditors also warrants a closer look, though the filing indicates no disagreements with the previous auditor. Ultimately, shareholders need to weigh the potential for future growth against the risk of dilution and current financial performance. Alright, that is our breakdown of Wetouch Technology Inc. Latest filing, what is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.